They control money without ever running for office. The most powerful institution you've never voted for. For centuries, a powerful, often hidden force has shaped economies, financed wars, and determined the fate of nations. Today, we're pulling back the curtain on the secret history of central banking. Get ready, because what you're about to hear might change the way you see the world forever. It all starts not with governments, but with private individuals. Picture Europe in the 17th and 18th centuries. Monarchs needed vast sums of money for their lavish lifestyles and constant wars, but their treasuries were often empty. Enter the goldsmiths and early moneylenders. These weren't just simple artisans. They were becoming the first bankers. They held people's gold for safekeeping and issued paper receipts for it. Soon, they realized something profound. Not everyone came back for their gold at the same time. This was the birth of fractional reserve banking. They could issue more receipts, more paper money than the gold they actually held, lending out this created money and charging interest on it. It was a license to create wealth out of thin air. One of the earliest and most influential examples is the Bank of England, founded in 1694. It wasn't a government entity. It was a private corporation established to lend money to the English government. King William III needed funds to fight a war against France. A group of wealthy financiers offered him a loan of £1.2 million at 8% interest. In return, the king granted them a royal charter to become the Bank of England, giving them the exclusive right to issue banknotes. Suddenly, a private group had the power to control the nation's money supply, profiting from the government's debt. This model became the blueprint for central banks around the world. Now, let's jump across the Atlantic to the newly formed United States. The Founding Fathers were deeply suspicious of central banking. Thomas Jefferson famously said, "I believe that banking institutions are more dangerous to our liberties than standing armies." He saw what had happened in Europe and feared a system where a private elite could control the nation's currency and plunge it into debt for their own profit. For a time, their vision held. The first and second banks of the United States, early attempts at central banking, were eventually dismantled after heated political battles. Most notably by President Andrew Jackson, who vetoed the rechartering of the second bank in 1832. For the rest of the 19th century, America operated without a central bank, a period of incredible industrial growth, but also marked by financial panics and instability. This instability became the perfect argument for the proponents of a new central bank. They argued that a centralized lender was needed to prevent financial crises. The stage was set for one of the most secretive meetings in American financial history. In November 1910, a group of the world's most powerful bankers, including representatives from the Rockefeller, Morgan, and Warburg dynasties, gathered under the cover of darkness on a private island off the coast of Georgia. The location: Jekyll Island, their mission was to draft a piece of legislation that would create a new American central bank. They worked in complete secrecy for over a week, hashing out a plan that would protect their own interests while appearing to serve the public good. The result of that clandestine meeting was the Aldrich Plan, which, after some political maneuvering and a name change, became the Federal Reserve Act of 1913. It was passed into law just 2 days before Christmas, when many members of Congress had already gone home for the holidays. President Woodrow Wilson, who signed the bill, would later express deep regret, writing, "I am a most unhappy man. I have unwittingly ruined my country. A great industrial nation is controlled by its system of credit. Our system of credit is concentrated. The growth of the nation, therefore, and all our activities are in the hands of a few men. So, what is the Federal Reserve? Despite its official-sounding name, it's a quasi-private institution. It's not the federal government, and it holds no reserves of its own. It's a network of 12 regional private banks, owned by the member banks in their districts. It has the power to set interest rates, control the money supply, and lend money to the government with interest. Every dollar that is printed is essentially a loan to the US government, creating debt. This means the American public is perpetually paying interest to a private banking cartel for the privilege of using its own currency. This system creates a cycle of ever-increasing debt that many argue is impossible to ever repay. Throughout the 20th century, the influence of central banks only grew. After World War II, the Bretton Woods Agreement established the US dollar, backed by the Fed, as the world's reserve currency. This gave the Federal Reserve immense global power. However, in 1971, President Nixon famously closed the gold window, ending the direct convertibility of the US dollar to gold. From that moment on, the dollar and, by extension, most global currencies became fiat money, backed by nothing more than faith and government decree. This untethered central banks completely, allowing them to expand the money supply at will. A power they have used extensively, leading to cycles of boom and bust, and a steady erosion of your money's purchasing power through inflation. Think about it. The dollar you have today buys far less than a dollar did 50 years ago. That's not an accident. It's a feature of the system. Inflation is often called a hidden tax, a way for leaden governments and the banking system to silently transfer wealth from savers and wage earners to debtors. The ones who benefit most are those who get the newly created money first, the government and the large financial institutions. By the time it trickles down to the average person, prices have already risen. Today, we're living in the endgame of this century-long experiment. We see central banks around the world engaging in unprecedented actions like quantitative easing, a fancy term for creating trillions of dollars out of thin air to buy government bonds and other assets. They do this in the name of stimulating the economy, but it has led to massive asset bubbles, soaring inequality, and the risk of hyperinflation. We are witnessing the largest transfer of wealth in human history, from the middle class to the super. So, what's the takeaway from this secret history? It's that the control of money is the control of power. A system designed in secret by a powerful few has come to dominate the entire globe, creating a hidden mechanism of wealth extraction through debt and inflation. Understanding this history is the first step toward reclaiming control. It encourages us to ask critical questions. Who creates our money? Who profits from it? And is there a better, more transparent, and equitable way? The story of money is far from over, and the next chapter is up to us. Thank you so much for joining me on this deep dive. The deeper you look into central banks, the less free markets appear. Don't forget to ring the notification bell so you never miss an update. Let me know your thoughts in the comments below. Until next time, stay curious.